All right, welcome everyone. First and foremost, just wanted to get through a couple things. This is the trade in that came in the market. First thing we talked about the breadth of the market. The advanced decline was strong today. I mean, gosh, we're advanced decline. I'll get to that in a minute. Right now, what we did is just a little breakout trade and on the algo optimizer. And as you can see, it hasn't gotten out of anything because why? Well, first and foremost, the profit target was calculated as up here. Now, see this orange line? That's the stop built in. Here's the entry right there. Here's the initial risk. So as the market moves up, it sets in a new stop level. So this is now canceled. That's the new stop level. If it hits and triggers that blue, it'll get out of half the position. That's what we're looking to see happen. So two things are going to occur. A, it will get out of half if the market upticks, or it will trail the stop and get out of the position if the market fails. So it's kind of a nice trade. We also have, in this environment with positive earnings on Walmart was nice, Cisco was nice. So we've got some kind of a recovery here. But I think the big news was that, there might be trade talks back on with China. Those tensions kind of eased because the market really has nothing else to talk about. So during this summertime market, I just want to also point out with the ES, I mean, where is the market? What did it do yesterday relative to where it started the week? And, yesterday we had some really choppy trading ranges. I posted that video, and I'll share with you the end result of the trade because, remember, I left you with the video showing that it was long one, and it was same situation. Is it going to get out, or is it going to just come back down and trail the stop and get out there? I don't know. I wish I did. But I could tell you this. The trade was a good setup to take longs once we broke out of the highs, and it finally broke out a little range here, and it got long on a system analysis. And, we are live right there. But here's another thing, is that the volume indicator, the person volume indicator on the lifetime trade stash package was showing strong green above the fuchsia. And here's your on-balance volume as a comparison, was also moving up. So it was a positive. I mean, there's nothing negative to be shorting the market today, and it was only about taking longs. Now it's just a matter of just managing the position. So if we can see this thing execute and just share it with you, what you do when you're in a trade and you have a lot of good things going for you, I think a lot of people have that trader's block, and that's where algo optimizers can really help people. But then people don't turn the systems on. And, you have to say, you know what, I like this trade because these are the factors that are in my favor. Strong advanced decline, strong volume, popular good news on TV, earnings are up. A name like Walmart beats earnings as strong as this. What Walmart does is one thing, but the psychology element it leads to the market is a different story. And I think the overall psychological element is, trade talks with China. That leaves a positive influence. So, therefore, if you're getting that trader's block and you go, I don't want to do this trade, why? Look at the risk factor. You know what your risk is. It's not that big of a thing from an initial standpoint. And work through what's holding you back from saying, yes, do this trade. If it's fear is just what, folks? It's just anxiety. Anxiety is a chemical reaction because where our minds are projecting in the future or our minds are reviewing what happened in the past. What does this trade have to do with yesterday? Not a lot. What does this trade have to do with the outcome? If you're so smart, I don't know where the outcome is this trade is. It's just a matter of, I like the fact that it broke out. I can handle that risk. Talk yourself through the trade. If you still feel nervous or you don't like the trade, there's other things that you can do to release that anxiety, because that's the fear, the butterflies in your stomach. That's all this is, fear. Fear can't be seen, but it can paralyze us as traders. Talk yourself out of that fear. Talk yourself out of that bad feeling. If it's butterflies in your stomach or anxiety, breathing exercise help. We're going to cover this in our summer school session, and this is part of the ways that we can take physical action to reduce that stress or that anxiety so that we can take trades, especially on a system that is designed to share with you what your upside is, what your downside is, and maybe perhaps with your algo optimizer know what the holding pattern pattern, the amount of time that you hold a position in. Anyway, while we're still looking at that, I just thought I'd just share with you the results yesterday. As I pointed out before the video ended, it was long one, and it was still sitting here in a long position. And then I said, well, it's going to either need to get stopped out or get out at the highs. Well, what happened? Look at the orange. It's the same, no different between this trade and the next trade, right? It's just that here is the entry. There's your risk. So you know what your entry is, you know what your risk is, and here's the profit target. So we're waiting for the profit target, and now that we're in a profitable trade, do we get out of both of them? Do we trail the stop and let it go up forever? Here's a short position that happened yesterday. It got out at the profit. The market didn't go down forever, but it got out of the second. It didn't get me out at the best price. It got me out at both of them at the best average price. So that's the situation here. If anything I could say is the same, it's the same in the sense that we have an entry. We have a defined risk. We know what our risk is by the red line, and we have identified what we're looking for on this particular trade as the profit target. And now that the price is near that profit target, it's instilled a what? Trailing stop, and that's the orange function, right? So either we're going to hit that, and I don't know, it's 11:43 in Eastern Standard Time. I don't know if we're going to hit that or not, but it seems that maybe the market knows there's some offers up there. We need 147 and a quarter in order to exit at 147 even. And so as you can see, we are stuck right here at 5 3/4. So we need a little thrust, and maybe that's what the market needs, is just a little pause. But either way, I could do one of two things. I can override the system now and say, get out of it. I don't like it anymore. I don't have any technical indicators to say my volume is starting to lose a little bit of positive momentum because the market's consolidating. But I haven't seen a sell signal. I don't have a weakening of the breadth in the market. I have other market analytics showing strength, such as the Russell. Let's take a look real quick. Go to our advanced decline page. The Russell is breaking out. The advanced decline in the Russell, this is this page here. I'll bring that into perspective for you. So the current state of the market is that the Russell is in this kind of wedge pattern, and we're kind of breaking out of its advanced decline. See? So I don't know where it's going to end at the end of the day, but boy, if we start taking out higher and higher levels in the breadth of the Russell, how does anyone want to stay bearish? The market projects possible higher prices to come. So if the participation rate in the advanced decline is stronger, then perhaps we're going to see what? Better end results to the upside in the market. So if the Russell looks good and the market internals look good on the Russell, that would be one set of analysis that I look at. The other is, let's take a look at the S&Ps. And as it is right now, we've got 455 stocks. Here's the breadth of the market. 455 are advancers versus 46 decliners. Look at the breadth of the market. Current advanced decline is slightly higher than its older high. Its older high was made on that high. Price is down here. So to me, there is a gap in the market. Maybe that's what's stalling things in the spiders. But we gapped up higher, we gapped lower there. So we hear a gap there, a gap everywhere, a gap. And if the market, because of that strong advanced decline analysis, if we start to get a cumulative volume pattern, how would anyone in their right mind want to be short the market on a day like today, not with positive breadth? And this is the stuff that we put together with a person's lifetime package and how we train everyone to utilize this information. So here's our trade. It's still working, still live, still long. You can count on the fact that if we get this thing bunched up and maybe a short squeeze ahead of the lunchtime crowd, which 12 noon, usually we get some type of the noon swoon or the noon balloon. If we can get this thing punched up, we're kind of not looking great with the volume up in here, but either way, it's a nice trade, and I'm sure everyone would love to have a long in their account up almost 6 handles on a 2-lot every single day, right? Anyway, we'll come back to the video and share the results in just a few. almost seems like a major tease in the market, right? 6.25, and we have our profit taking right here at 7 even. Nice to have that blue bar. It tells you what your profit target is. Any worries here? You see this white line in the sand? To me, if the market closed underneath that white line in the sand, another function that's hidden back here, it would move. It would take action on a last conditional change breakdown. But that's more code in the algo optimizer than we're going to talk about in this video. But the point is, there is a way to protect profits that we have in the market while doing two important things: scaling out and trailing a stop just in case the thing runs up and it's one of the greatest up days since American history. Who knows, right? But if you can protect your profits, if you can trail a stop, that's the neat thing. It's kind of funny, the market is taunting and toying us right at this 47. I would think that, on a day like today with such strong advanced decline and better performance out of a little bit of crude oil, weakness in bonds, I would have suspected 28.50 would have been something that we could have sunk our teeth into for upside. But anyway, 28.50 is that psychological number, but apparently so far it's 28.47 on them. That's our profit target on this trade. All right, we'll come back to it. All right, we're actually, from the target number is 3/4 of a point from 6.25, but as you all know, we need one tick to trade through us to do us in order to exit out of the trade. So we're going to need 47.25. That's 4 ticks. Can you imagine this market? It is now trying to punch through the highs here. We just don't have a strong little volume, and it's right 5 minutes before the 12 noon Eastern bar. This is 11 o'clock down here. You can see it says 11 because why? This is in market time. Market is in Chicago, the CME. So this is, as you can see, live today, 8:16 at the top of the hour is 11 o'clock bar, Chicago exchange traded time. This is again at the Central Time Zone. So anyway, that's where we are in the position here, long at 40 on 2 contracts. And geez, I mean, this is, you got to kind of say, is 1 in hand versus 2 in the bush. So how could we do this? Well, it's an algo optimizer. We don't have the capacity to override the system on half of it. Meaning, if I said, okay, turn everything off, I'm going to get out of 1 and I'm going to turn the system back on, that's no good, because when it does fire off to get out, it's going to get out. And so if you alter the algo optimizers and override it, which everyone has that opportunity, what you're going to have to at that point do, just to let you know. So if I said, you know what, I'm tired of the market, it's lunchtime, I got to go, I don't want to watch this. Why would anyone watch an algo optimized trade? Well, for one very important reason. 2 actually. If Commonwealth Edison goes out, I don't have electricity. If I don't have electricity, my server goes down, my internet goes down, I'm not connected to the server to trade station, and therefore if the market then went to send an order in, I'm not getting out. So that's number one, why you watch an algo. Not that you're watching the trade, that you're watching to make sure there's connectivity and that your internet didn't go down. That's the main reason, okay? So, and you want to make sure everything's going right. So I can override the system, turn everything off and say just flatten the position, and I can do that in a heartbeat. You always turn the system off before you flatten a trade. If you flatten a trade, and as the Murphy's Law is, as soon as you flatten it, especially ticks away from your profit target, if you flatten the trade and don't turn off the system, what happens if the market goes up and it tries to flatten a trade that you just got out of? Oops. Now you're not flat, now you're reversed. Sometimes that might work for you, but it's an error. Cover the error. So do things right. Turn the system off, then exit the trade. There's a little lag time, and I'm sure you'll figure out the lag is sometimes profitable and sometimes not profitable. But at this point in time, we've given this trade 5, 10, 15, 20, 25, 30, 35, 40 minutes. It's not giving any sell signals. The volume's weakening here. Nothing's really going on. The Dow's near its highs. The VXX is near its lows. So I'm just like waiting patiently, and there it is. We're out, and we just got in as a position, which is totally cool. And I just talked my way through this thing. Now, what we're going to need is we'll see at the conclusion of this bar, we're going to see if number one, this last conditional change will change to orange, a new color, and that'll trail the stop up in this case, which would be nice. I don't know if the market's going to continue up for the rest of the day. I do know from the long position it is protected currently, and it will continue to be protected, or it'll get stopped out on a free fall. All right. Anyway, that concludes that. I hope everyone enjoyed that. It was kind of, so far, pretty nice. At least you know how things can be done and handled around here as they should be for an algo optimizer. Talk your way through the trade. What do you like about it? What don't you like about it, right? Would you be short the market? Hell no, right? So if you wouldn't be short, why get out of the trade other than getting out a half near a respected profit target? That's our lesson for the day, and part of what we're going to be teaching in our summer school session. If you haven't signed up for that, I would definitely encourage everyone to sign up for that. The event was posted on a webinar that we did. It is going to be conducted on 2 Saturdays. It's a fantastic way of looking at the market and getting a refresher course before what I consider most powerful session that we have, which is going to be the fourth quarter. So here, let me share with you, just go up here and we'll hit delete and just go SU Summer School, enter, just /Summer School. So it's personsplanet.com/Summer School. You can watch the recording of what we put out on that rule-based webinar that we did. If you haven't seen it, I suggest you take time to review that video. In addition, this is what we're going to be covering. This is what everyone gets. My 3-day extensive course that was a live training seminar. Lots of incredible information there, amazing information, in fact. So what I would definitely tell everyone to do at this point in time is read over this and then order and sign up for our summer school class. It's only $478. I got news for you, gang. It's going to be a fantastic event for those especially that may be suffering with a little bit of trader's block. In any event, so here's the deal. Our offer was taken because we were in that market. That offer had been working, and that blue line was up there, and the market, obviously, as you can see, is traded through our price. So that's also another gimme. When a market hits your offer, you probably assumed that there was bids at your offer, and that's how we did get filled, by the way. So it wasn't the high of the day by any stretch of the imagination, and it continues to see some positive upside. So we're still in the half the trade. Long 2 out of 1, still long. Hope you enjoyed this video. Until next time, thank you. And don't forget, sign up for the summer school, especially for those who want to hone their skills, get better, prepare mentally, physically, financially, get prepared for the most important financial quarter, the fourth quarter. That's why you're in summer school with John Person. Thanks, everyone. Take care.